Mehraboon, you've taken offense to that circumspect issue that I spoke about. But the fact is that everybody was a little skeptical at that point. But moving on, what are the pockets that you think you'd still put your money into even after this up move?
I think really what is needed is all fund managers, or me included. I think we have to be very agile at the fact, and we have to possibly try to time the market as well as possible, because if we are talking of a market moving in a range, and that range is quite wide, I'm talking of the range which I personally feel it should be 12.5 to 18,000 over the next 12 months. I think lower levels, I think one needs to look at rate sensitive sectors, because the last 1 month when the market has gone up by 20%, the rate sensitive sectors, especially banking, which has possibly taken, which has gained the most. So if you stay away from these sectors, thinking that, okay, the macro factors are against us, we should not touch interest sensitive sectors, like what I was stating, possibly meaning at around 15,000 levels. But at lower levels, definitely we bought into some of them, because if you don't do that, you are going to underperform the market, and that's what clients ask. Okay, how well have you performed versus the market? So I think it has to be a mix. You have to have a defensive as well as aggressive stocks in your portfolio. But again, it's like at what levels are you buying? So at 15,000 levels, if you're asking me after the sharp run-up which we have seen in the rate-sensitive stocks, whether I'm going to be a buyer, today's answer would be no. I would possibly wait for the market to cool down a little bit after the sharp 15-20% rise which we have seen, and 25-30% rise which you have seen in most bank stocks or some of the real estate stocks also. I think a little bit cooling down, and possibly one can look at rate sensitives again, because again, Vinny, I say the same thing, that what was plaguing the Indian economy was the fact about oil, commodity prices, and both have cooled down. And now if you say that SBI chairman says, and amen to that, the interest rates don't go up further from here, I think most of the negatives which you're worrying about possibly would get tamed a little bit. So I think at lower levels, definitely one should definitely look at rate sensitives also.
Right, a couple of sectors I'll throw at you. Mehraboon, give me quick answers on what you think about them. Media, because we've seen quite a amount of buzz out there, be it a Zee TV or a Dish TV, which of course gets into the futures and options side soon.
I think quite interesting. This pack is very interesting. It's one of my favorites, many if you allow me to say that. But I personally feel that one should be buying some of this media stuff, not necessarily all. I think quite a few of the big players, I personally feel you should be buying possibly for 2010 or 2011. So if you're ready to stay over there for the next 2 to 3 years, I think this sector possibly should end up giving good returns to investors.
Right, fertilizer, after the kind of up move we've seen on those counters, especially counters like Chambal and all, which are cooling off substantially today.
I would put it that they are lovely trading picks, but because the main reason for this is they move up and come down only on announcements. Otherwise, this is a sector which not many of the market take interest in. So you have sharp movements here and there, maybe 3 or 4 times a year. So from the trading angle, yes. From an investment angle, no.
Vishal IT, you would have made serious money if you had subscribed to that IPO. Do you even track that counter?
No, I don't, Mini, I don't.
Well, we must have something on that on this show. We'll try and get your voice on that. What about the capital goods and engineering space, Mehraboon? It is interest rate sensitive, but if you're betting on India, you ought to be betting on that.
Of course, yes, Vinny. I think I've been very vocal in my support for those capital goods stocks, the way they were hammered down. I personally feel valuations even now in some of them look very attractive. In fact, if I'm not mistaken, Punch Lloyd as a company is being upgraded. The earnings are being upgraded. The company is being upgraded. And even a stock like Larsen & Toubro, though it has run up from 2,100 to 2,850 right now, I personally feel there is too much of value. I rate it one of the best companies possibly in the world. And even if you look at some of the transformer companies, which also would be a part of the entire engineering pack, a company like Bharat Bijli, a company like Voltamp, a company like Crompton Greaves, the valuations that they are going, I think is going absolutely attractive. So why should I not buy into these stocks? Possibly the markets may reverse a little bit, I may come down 5-10%, but at the end of it all, 3-6 months later, I'm definitely going to make money in the stocks. So if investors start looking at things from that angle, that is what I was trying to say, that is what I was trying to say, that there is opportunity in quite a few stocks.
Right, we've got about 20 seconds for the markets to close, and let's tell you how the markets have closed. The Nifty down about 0.3% at 4536. The Sensex at 15,118. Not a bad closing at all if you see that the markets went all the way down to 4497 on the Nifty, and we at the end of the day did see some buying coming into the non-ferrous side of the markets. That's an interesting side really, because you saw Sterlite up about 20 rupees at close, Nalco up about 6 odd rupees. That apart, Infosys stood on, with gains of about 21 rupees. Tata Consultancy saw per cup up about 13 odd rupees, and SBI ended the day in the green finally after touching a low of about 15.22. So quite a good climb back for that counter. But the kudos have to actually go to the mid-cap side of the market, because that's where a lot of the action really happened. And look at these stocks that actually got included in that futures and options side of the market. Noida Toll Bridge up about 13.5% in today's market. Dish TV, that's had a spectacular run-up, up 10% in today's market. Subex up about 24% in today's market. The other part, India Bulls Real Estate up again about 2% in the market. Mercator Lines, another counter on that list, up as well. So a whole host of stocks that actually got involved and got included in the F&O side actually moved up substantially. And of course you have KS Oils up about 10 odd % in today's market. That apart, we have a whole host of other counters which were buzzing around most of the day. The fertilizer pack, very choppy trade in them. Nagarjuna Fertilizer and Chambal, for instance, Nagarjuna went to a low of about 42.60 and then finally closed at 43.30, down about 20 paise, though Chambal was looking a little weak, down about 3.5%. So a whole lot of churn that's happening in these markets, and tomorrow, remember, is the Thursday and before a long weekend, so very few people actually going to bet or go with positions into these markets. Mehraboon, the other issue, of course, that you need to contend with is that SEBI meet on the P-notes issue. What are you really expecting, and could there be any surprises out there?
Well, I really wouldn't like to state as to what is going to ultimately happen, but I can only say many that yes, there are expectations. So if frankly nothing comes out of it today, and if things get deferred a little bit before SEBI makes another statement maybe some days later, I think there could be definitely a little bit of disappointment. And if the global markets don't hold tonight, we could have a weaker opening definitely tomorrow, considering the fact that we have run up a little bit sharply over the last 7 to 8 days. So yes, SEBI meet, I would say at least 20% weightage, I would give it to that. So the markets remaining a little bit firm as compared to what has happened across Asia, as what is happening in Europe right now, and what happened to the US yesterday. So I think, yes, definitely 20% weightage I would go to the fact that there are expectations built in as to what we saw in the market remaining rather resilient amid the overall fall in the global indices.
Right, Mehraboon, stay on with Well, we'll head into a short break. Mehraboon, your last word from you really. Going forward, if you said the interest rate sensitives are looking a little overbought perhaps at these levels, would you go with a defensive place? Because we did see the IT stocks do fairly well today.
Well, stock specific definitely one can continue to look at, but after the way the markets have gone up, I personally would possibly do a little bit wait and watch for the moment. Because yes, we bought into stocks at lower levels, and we learned to book our profits this time out. So I would possibly wait for some dip in the market and possibly enter into the market again. And maybe what I'm trying to state is that we ultimately need to have a view. Are we looking back at oil going back to 135? The answer is no. Then rate sensitives, yes, at the next correction one should possibly be looking at it all over again.
Right. Thanks so much for that, Mehraboon. Mehraboon Irani from Centrum Broking joining us. So all in all, it wasn't too bad a day for the markets. In fact, I have the turnover figures out here, 61,000 crores done. In fact, turnover has been trending lower for the last couple of trading sessions. A lot of people sitting on the sidelines in these markets, which have been, of course, extremely choppy, but it's all about timing. And if you'd put your money in July, on the 1st of July, you would have had quite a decent bit of returns, of course, in these. At UTVI, trying to tell you and make sense of what happens at that SEBI meet. Thanks so much for joining us. Goodbye.